Good evening, everyone. My name's Troy Gunasekera, National Manager with the Property Club. It is, Tuesday the 22nd of October when we're putting this together. So the year is flying by. The year is flying by. So thank you very much for coming on. I've got a pretty simple and easy updated presentation to go through this evening. Just to cover off with the content, the invitation that came out was talking about the same content we'd had previously, which was a finance webinar. This now is, and that is available for download, which you can request from your property mentor or inquiries at propertyclub.com.au. And this webinar that I'm doing this evening is actually just on a property market update. So Kevin Young's unfortunately not available. He's been caught at a function. So I've drawn the short straw and I'll be going through everything this evening. So if my audio is coming through loud and clear, can you please just put your hand up on the GoToMeeting control panel if you can hear me clearly? I just did a test earlier with one of our guys, Chris, who's been online and helping. Perfect. Thanks heaps, guys. So that's worked really, really well. Okay, wonderful technology, isn't it? Okay, let's do this. So just a simple disclaimer, which you all would have seen before on what we've covered, is we're not giving you any detailed financial advice with this. We're talking from our own experience and sharing that with you and showing the benefits of property and how it would work for the bigger picture. Just to look at what we're covering this evening, and as I said, I'm tying in the property market update with this. So it's why property, but why the Property Club, but why wait, why invest, and what are some of the areas that we can look at for that. So there are a lot of changes happening in the finance space, which is quite good at the moment, considering what's been going on there. And as an example, ANZ Bank just recently announced that now they're going back to offering interest-only loans for 10 years. So from an investment perspective, that's very, very good, because that gives you the capacity to be able to hold the property for longer and not have your cash flow impeded as such. So there's some great opportunities in that space. One of the things we talk about, and I always give credit where it's due, and this is one of my property mentors, Troy Hemmetsberger, over here in the West. And he came up with this saying, which I think is really appropriate. And some people say, wow, Troy, you've got all these properties, or Kevin and Kathy, you've got all these properties, Troy Hemmetsberger, you've got these properties. But it's what we can actually do with it. It's for the outcomes that we're going to get to down the track. So, sorry, this gentleman's name is Troy as well, so it's quite funny to talk about another Troy. But Troy's comment, if you like, was don't do it for the income, we'll do it for the outcomes. And when you look at these are some trips that our property millionaires have been going on, because they've had the capacity to scoot around and go on these because of the wealth that they've created through their property. So we've got over 5,000 members in our Property Millionaires Club now, and that is primarily with the wealth that they've created out of their property portfolio that they've got. So when you look at this, it's awesome that they're able to do this, and they've got the capacity too, because they've invested in property the right way and they've been able to hold for the long term. Here's some actual pictures of the PMC members on those trips, and yeah, they have some fantastic ones that they have planned and that they're continually going on because they've got that capacity through their properties, which is brilliant. Looks pretty cold up there, doesn't it, up there at the top right? That's Alaska. We're all rugged up. So just a quick recap, and we're so proud that the Property Club's been going since 1994. So since 1994, 25 years now, Property Club has assisted members to safely invest in residential property for the long term. Some of the key reasons and how and why we've been able to do that is we've had the right properties in the right areas, best chosen for capital growth. So we've got property researchers all around the country that are continually researching to find those properties in the areas. Critically, as you can see on the bottom point there, they're looking at rental assessments to ensure that the properties are, as I said, in the right area, but just as critically that the rental is sufficient for holding costs along the period. If there are any questions, guys and girls, just to let you know again, there's a questions box in your GoToMeeting control panel that you'll be able to type questions into, or the chat box. So yeah, please just use either of those great options and I'll get them when I'm flicking through my slides. So the key benefit that our research shows is our property profiles. Our property profiles are typically a 10+ page document that show the details about the property. They give construction and location appraisals, comparative sales in the area, and detailed site and floor plans and the like. We've got a fantastic department called Club Leasing, and Club Leasing help to find a tenant quickly. They work with up to 3 to 5 normal property managers who just do property management in the area, suburb, and that works to minimise vacancies. And that's done tenancy after tenancy, year after year. So it's just fantastic with that benefit that's available to club members ongoing. One of the key points, and we just had a meeting with a member the other day, and they've got 3 properties and they did not know about the tax variation form. So in a really simplistic example to give, for an average Australian income of say $80,000, and please, I understand and respect that some incomes might be below that, some incomes might be above that, but the average as quoted by the Australian Bureau of Statistics is $80,000. So if $80,000 is the average income, and John and Mary Smith in this example were to purchase an average median priced investment property, which is say around 400,000, they would get back on tax, if that was their first property, about $5,000 for the year. So now out of that $5,000, what that basically means is if they settle on the property on the 1st of July, that is great news because they've got until the 30th of June. They get their group certificate in, they put their tax return in, and they'll get back approximately $5,000. However, if they settled on that property on let's say they've just started, they're halfway through the financial year, then their cash flow is going to be a bit more affected. And what we can do is we can work with the accountant to be able to, and the tax office, to be able to put that tax variation form in, so you're able to get that extra pay, that extra, it's, you know how it averages out to $100 a week, you can get that in your pocket every week, fortnight or month, however often you're paid. So that's a fantastic benefit. It's not as beneficial in the early properties, people having 1, 2 or 3 properties, but probably 3 and above is where it really starts to show its own, which is great. We've also got the benefits of members being able to, I live here in Perth, as you might know, if we've got, and we have got Perth members that go over east to see the property in Sydney, Melbourne or Brisbane, wherever they're going, at the moment, with the current tax laws, that's not tax deductible. And within the Property Club though, through that process, after settlement, Property Club will reimburse you up to $700 for that. So it's just a neat little thing that assists along the way. I hope there are no builders online. I really don't mean to upset anyone, but building is a bit of an imperfect science, and there's always things that have to be tidied up and touched up at settlement. And we do 2 inspections prior to settlement to ensure that the property is as shipshape as it can be, because good landlords attract good tenants. Just that point on the bottom right, we just had a club member here in the West settled on a property over East. And what they actually did is it was a second-hand property. And we did have the building and pest inspection done. And there were some issues that came up with the building. And that was just issues with the roof. And then the vendor was able to drop the price a little bit more to allow for those costs. So it's going to cost about $1,000, and the vendor dropped the price by $2,000 just because they wanted to move the property on as well. So there's those massive benefits that are available as well there. This is our cash flow report, the first page of it actually, as you can see there on the right. It's 1 page of 7. The 7 pages of detail that we go through show, as you can see there, the emphasis is on the word personalised, because it shows exactly how the property cash flow would and should work for the very least year 1, excuse me, and then some great projections moving forward as well for 3, 5, 10 years. We can project it out many years. One of the other great benefits we've got that Kevin and Kathy Young themselves have used with all of their properties over the years as well is, well, the acronym's FIDO, but it actually stands for Financial Independence Day Organiser. It's not anyone's dog's name, I guarantee you that. And this assists to develop a plan which shows that based on the properties that you have today, how will they look down the track? If you buy another property, if you don't, if you sell a few properties at retirement, and how that would work. The finance side of property investment is one of the most important parts. As you can see here, we talk about getting the right loan set up with the right broker. with the greatest respect to all of our big four banks, if you or I went into the Commonwealth Bank and said, we'd like to look at investment property loans available, they will quite rightfully tell you what's on their shelf and the loans that are available. They won't tell you that at the moment, for example, we've got a lot of members going through with NAB, that NAB are just a little bit more aggressive at the moment, A, in terms of getting the loan over the line, and B, with the interest rate as well. So to have a great property club broker in your corner really does serve to keep that moving forwards and keep your portfolio moving forwards, because if you don't get the right finance in place, I can guarantee you from many times that we've seen this, you won't be able to leverage forward and move forwards. We've got some fantastic ongoing education events, and this is a snapshot, the photo you can see on the screen there from our national conference. And we've got webinars like this. We have typically fortnightly and monthly workshops, local workshops in your area, and access to a lot of online information and research that Kevin, myself, our research team, and the branch managers put through. The most important part of that journey is your own property mentor. This is an experienced property investor themselves, who've invested many times themselves and also assisted many others. So they're giving you their assistance to their time and knowledge, assistance with their time and knowledge, accessing information through our system and many others as well. That's Wendy Priestley, who heads up our Property Millionaires Club, and we've got 5,000 plus property millionaires in our PMC, Property Millionaires Club, PMC, at the moment. They have access to, as I was talking through earlier, advanced level information, international workshops, and additional software tools and support, because with those, you're actually having different structures in place when you're having 5, 6, and 7 properties versus 1, 2, or 3. This is another snapshot of that cash flow analysis that I was showing earlier, and this is a good example of that customized example that I showed, that I was just touching on earlier. Standard, say, average type example, showing how much a property would cost to hold. One of the most common questions we get, and I just want to quickly reiterate, quickly answer this, because it's one of the most common questions we get, as I said, is how on earth does the property club do this? How on earth are we funded and do this? Very simply put, we're paid by the vendor at settlement, just like they will be paying a local agent. When vendors pay a local agent, they're paying for some advertising, marketing, and selling fees when they sell the property. That's exactly how it works with the property club, and we are paid at settlement just exactly like an agent is. So there's nothing extra built into the price. There's no buyer's advocate fee or anything like that. The price is what it is if you or I were to purchase a property through the property club or through your local real estate agent, if they are using that medium as well. Here's an example of some of the properties that we've got, because looking at that, what we've done is we just break things down to a 7 steps scenario. Number 1 is to learn at events like this. Number 2, look at your borrowing capacity and see what field you're in, so to speak, in terms of that, what you could potentially do. Then you set up a plan to look at which way you would head and what you would do first. You'd look at your cash flows, you'd accumulate the properties, and then you wait. And the waiting period, depending on the time you've bought and where you've bought, can be long, can be short. But you wait for the properties to grow, you harvest, and then you celebrate when they get through that process. So it really is as simple as that from the 7-step side. I just put this up because Sharon, my wife, and I, and many others that we've worked with, we always used to be on the left-hand side of this table here. We used to think debt's bad, we've got to save a lot. We actually thought that you make your money out of property, and you generally do, out of buying and selling. But now our property club members, and you can see on the green side there on the right, that's really how we're structured. So we've got a wealth mindset. Our assets are working for us every day, every hour of every day. Debt is good when it's good debt, like our investment property debt, because it's deductible against the income coming in. And we're buying and holding property. We're investing based on the facts and numbers, not based on, geez, I don't like the way that kitchen's laid out. So in putting this presentation together, when I was just doing some research and Kevin and I were discussing this, interestingly, we've been around for 25 years, and Aussie Home Loans just recently put out a 25-year housing trends summary. So I thought pretty appropriate just to summarize for us and our club members. So looking at this, what prices have really done over the long term, and you can see, I mean, who would have loved to have a handful of properties at $100,000 back in the 90s? And you can see here, this is showing both the houses and the units and what they've done across that period. When you look at this, so that was the national house and units that's listed on that graph. And now this page shows the unit values over the past 25 years. So you can see that we've had low inflation, high inflation across this period. We've had low interest rates, high interest rates. We've had the Gulf War. We've had September 11. We've had the GFC. We've had the GST when that came in. That was supposed to throw everything sideways. And you can see what our property prices have done nationally through all of those changes. So as I said, just confirming that this is Aussie, you can probably tell by the colours actually as well that it's come through, but this is all Aussie home loans data that they put through. And they put this together with CoreLogic, who are CoreLogic RP data, who track every house price in the country. And they're like the industry Bible for property here in Australia and overseas. They're an American-based company. So have a look at those. If you extrapolate those house values out, the numbers start to look pretty silly. But then also, if we just flick back to that other slide that we had, $100,000 for houses in the 90s also looked pretty silly. But it really comes down to supply and demand, and I've got a bit of information which will cover that further. This is one really important point I thought to cover in this day and age of interest rates being too high or too low, or they're going to go back up again and everyone will hurt. Have a look at that. So from 2002, this is on the left-hand side here, it's actually showing how much of the household income, an average household income, is required to service that mortgage. And it was low, it went up when the interest rates went up, as you can see, and now has dropped away again. So interestingly, Sydney and Melbourne are a bit of the outliers there because of where their markets have gone in the past little while. But when you look at the national average down the bottom there is 26%. It was in 2001 of the average income to service the average mortgage. And now it's 35%. So granted, it is higher, but then we could get into a big ethical debate here about what people are spending their money on, but that's what we're looking at, just the facts there. Interestingly as well, the rise of housing as the preferred investment class and asset. Have a look at this slide showing actually, so from in the 90s, there was 20% of mortgages were going out for investment purposes. It's doubled to 30 and 40%. And you can see it dropped off a little bit there, again around GFC period, around 2008 to 10, and then has headed upwards. So you can see back in, May 2015, it was actually 55%. So as I said, the bigger numbers there at the summary is the national number was 20%. It's now 42%, so it's twice as many investors, landlords out there in the market. So it's important when we're looking at this to look beyond the 365 days, taking into account that information, look at the bigger picture. I picked up this slide the other day, which I thought was really instructive, and it really shows, this is from 2018 data, as you can see down the bottom middle there. And have a look at this. So, I wanted to point down to Australia down there at the bottom right, but it really is with China, really. The rest of the slide makes for some interesting reading. But if we read from the left-hand side first, the United States had 10,000 high net worth individuals arrive in 2018. And obviously there's tech companies there, New York City, LA, etc. China lost 15,000 high net worth individuals. You can see there on the right-hand side, though China is seeing a lot of wealth migration, the country is still creating more millionaires than it's losing. And now little old Australia, we have housed 12,000 of those high net worth individuals. And as it says there, for the fourth year in a row, Australia has beaten out the US as the top destination for migrating high net worth individuals. And that really shows where the demand that we've got for properties. Another slide that I've got, actually it's not on here, but an article I was reading during the week is talks about where the growth is in most of the big cities around the world and countries. And it all goes down to basically coastal areas. And that's what makes Australia so attractive, because a good 90% of our population is all on the coast. This article just came out earlier this month. So this is current data. And this said the Chinese appetite for Australian residential properties has hit $5.5 billion. So this is a 25% increase that they had previously. So I know we're in 2019, obviously, and this is 2013 data, but that's how they calculate the data and how they're able to finally get all the information out. So that just goes to show what demand we've got for properties here in Australia. Because then looking at this further, so Heron Todd White, you can see there the icon in the middle, they're one of the largest property valuers in the country. So they value many people's properties for the banks and for themselves and for the purchasers or owners themselves. So it's quite well referenced, this property clock is. And just to explain property clock, someone asked me the other day, which was totally fine. Troy, what on earth is a property clock? What does it mean? Well, if you look at the main points there, 12, 3, 6, and 9, 12 is showing the peak of the market. 3 is declining market, so basically going lower, 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 bottom of market, and then the start of the recovery and rising market. So I've got two slides here, one showing the houses and one showing the units. And it's really, again, interesting to look through and see where these different markets are at. So Sydney's come through its declining market and bottom of market pretty quickly. It's now in the start of the recovery. You can see there at 7 o'clock. Brisbane as well is, and my hometown of Perth down there is still at the bottom of the market and now starting to recover. And I live here, so I know that and see that. So there's some really good opportunities around. And then when you look at the units as well, this also shows where those markets are at and where they're at. And you can see there Sydney units as an example, just again referring to Sydney, they're at the bottom of the market because units have taken a hit nationally. You can see there's a lot there sitting at the bottom there. But then the others are starting to head upwards, as you can see on the left there as well, which is pleasing and good. So therefore, as I touched on earlier, we're in October, we're not far away from the end of the year and Christmas time and the silly season. So rolling into 2020, where would we look to invest? So I've got some data here, again, current and up to date from October 2019, so the current month that we're in from CoreLogic RP data. And just echoing those numbers repeating those numbers that I covered earlier, you can see here that residential real estate takes up a massive amount of Australia's wealth. It's just over 3 times, as you can see, our share market, and 6 times our or more than that, 6 times our commercial real estate market that's there. It's currently in place. So interestingly, where the market's at the moment, so this, as you can see, the middle graph in the middle of the page here shows quarterly change in dwelling values. So that's showing what our dwelling values have done again over the past 25, nearly 30 years. And you can see through that period, they've gone up, they've gone down, and now very much so, and this is what a lot of commentators are talking to at the moment in the marketplace, is it's been like a V-shaped recovery. So that is, there was a big dip as those house prices in Sydney and Melbourne, realistically, with a bit of hindsight now, went up too high too quickly. And now there's very much a recovery as well as pick up in other states like Brisbane and Perth, other capital cities as such, while Sydney and Melbourne come off the boil a little bit. As I touched on earlier, what's really driving this through is the housing demand. If we didn't have, you might have seen one of my Insights articles I wrote, I think it was last week actually, where I talked about housing demand. And these high migration rates that we've got, if you look at this, the largest graph on the left-hand side, their quarterly change in population, it's gone up, it's gone down, but there's still been massive steady growth. And so you look at that quarterly change in population and we're pushing 100,000 per quarter is what's echoed there. Now that's made up of the natural increase, so our birth rate, and obviously people sadly pass away, but that's life, and there's natural increase. So that's where our natural increase is. So we're still having babies and our population's growing there, but also our overseas migration. So you add those two graphs on the right together and you get the left-hand graph, the quarterly change in the population. So it's actually 1.6% higher, as you can see there, over the 12 months to this year, to March earlier this year. The other amazing thing is that currently these are lowest interest rates we've had for our generation. So we're talking back, the cash rate and therefore the mortgage rate that you and I pay on loans has not been this low. And what I personally and professionally take a lot of comfort out of, as you can see here, is where the rates are actually at for the fixed rates. So at the moment for investor loans, you can get 3-year fixed rates at 3.8%. For your owner-occupied place, you can get fixed rates at 3.4% for 3 years. So what that's actually showing is that the banks are pretty comfortable that the rates ain't going to be moving up much higher than that across that period. And if they were to, well, then it's too bad, so sad, because if you're fixed in it, it's great. There is a slight premium now, and those of you that investors might know about this, is that there's a slight premium for investor loans. So you can see here that at the moment, the owner occupies rate is at 4.25% and investors at around 3.8. So on the finance side of things, this is where Property Club members have been really successful, because as you can see here, the margins at the banks have increased their, this was an article in the Australian, they put this graphic together, just credit where it's due. The margin that they've had used to be 1.8%. Have a look at that on the left-hand side there, and is now 4%. Is the difference between the bank's average standard mortgage rate and the RBA cash rate. Now, I'm no economist, I'm no bank CEO, and they've got a lot of reasons why they explain that, but the fact is, it is what it is. Conversely, though, it's interesting to see with their credit cards, they haven't, that hasn't changed much at all, even though the mortgage rate, even though the RBA cash rate has dropped substantially. And this is probably one of the key slides you could take out of this evening, where we're assisting a lot of members from a refinance perspective for them to be able to have a look. So after the latest rate cuts, if the banks had not increased the rate margins, that's what extra people could have afforded, be it for their own home or for investment. It covers both of those. So we've got a lot of club members at the moment getting access to rates with a 2 in front of it. Basically, there's a lot of 2.9% loans and rates that we're seeing going through at the moment. And you just have to look at the difference there and see how much, can I say, better off that you would be if you bought a more expensive own home or more expensive investment property. It's just going to pay off for you better in the longer term. We've got our Property Club toolbox, and one of the great tools we've got is our Crush Your Mortgage. And so it's our mortgage muncher. So it shows you what you can do with the tax return that you get, and how, if you put that into your own home loan, how much better off you would be. So it's a great tool to ask your property mentor for, that we can assist you through. We've also got our Property Investor magazine. So this is a quarterly publication that we put out, and this shows you details about real life members, what they're achieving, etc., and how they're getting through and holding the properties through that period. So one of the handouts that we've got this evening, you'll be able to see that you'll be able to download that and choose it from your handout section in the GoToMeeting control panel, GoToWebinar control panel, sorry, and it's our financial wealth check form. This is just such a great tool to use to go through the process to actually fill it out and have a look at what you could potentially be refinanced to. That's number one, because we've got a lot of members who have been on principal and interest, and then we've been able to successfully get them over to interest only. That's point number one. Point number two then is to even get them onto lower interest rates. So there's great benefits available that you can get from filling that out and sending it back to your property mentor, or inquiries at propertyclub.com.au. So it's up to you, as we say. If you don't take action, it's an old line, but if you do nothing, you get nothing. So just a reminder, what are we doing this for? We're not doing it for the income, we're doing it for the outcomes. It's what you can actually achieve, and trips you can have with club members and the like. And you know what, there's a common denominator of property there, and then you just have a new friendship group that you work with, which is great. So that is pretty much the end of, not pretty much, it is the end of my presentation for this evening. I'm right on time, half an hour. I promised everyone I would. Are there any questions that anyone would like answered from me with anything I covered this evening, or anything other in general? Because just before I go on, I've just got to launch a quick poll, if you don't mind. So I've just launched a poll saying, how did you find tonight's webinar? Yeah, if you could just please honestly let us know your thoughts, that would be great. Obviously, Kevin and I and the rest of our teams put a bit of effort into these to make them as informative as we can. And if we need to cover different content or the like, just please let us know, and we'll do our best to do that. Thank you for the responses I can see coming through now. That's great. 70% of you have voted, so just a handful more. to click on it. Off we can go. Okay, great. Thank you. And then I've got one other poll, two other polls saying, how did you find the length of tonight's webinar? You know, half an hour as we committed to. Was it too short, just right, or too long? Just let us know. And as I said, you can type in any questions or chat messages in there. If you had any other questions that you wanted, or your property mentor to get back in contact with you. Brilliant. Thanks again for the positive feedback. Appreciate it. And lastly, would you like to hear from your property mentor to touch base on any of the content that I've covered this evening? And we can easily get them in contact with you. It could be simply, you know, to have a look at your loans. If you are on principal and interest, we can assist to get you to interest only. We've got some really good funding options available in that space. So yeah, if you just tick yes or no on that, your property mentor or a head office representative will easily be in contact with you to assist. Brilliant. Okay. Well, thank you, ladies and gentlemen. I haven't seen any other questions come through, so if there aren't any, we'll just keep it going for a little bit. Just a quick shout out and thank you to Chris, one of our head office representatives who's helped keep everything run smoothly this evening. So big shout out and thank you, Chris, for assisting with the coordination, and Roxy as well, one of our marketing ladies at head office. So yeah, thank you very much again. You can connect with us on LinkedIn and Facebook as well. We've got a great community online there that you can get further information from. Thank you very much again for coming along. I really hope it was beneficial, and I look forward to catching up with you at a club function down the track. Take care and cheers. Good night.